Banks sent money and got nothing back. Not because of a war, not because of a market crash, because of a time zone. By lunchtime in Germany, a bank in Köln had lost its license. In New York, it was still mid-morning. Traders were still waiting for dollars that would never come. One side of the trade had already settled. The other side was gone. That failure was so consequential it was given a name the market still uses today in every foreign exchange transaction on Earth, 50 years later. It's called Hallstatt risk. This was not a niche failure. The Bank for International Settlements recorded approximately $9.6 trillion in foreign exchange transactions every single day in April 2025, the largest financial market in the world. Every one of those transactions is an exchange. One currency goes out, another comes back. Simple in principle. Here's the problem. Currencies do not settle at the same time. When a bank in Europe exchanges Deutschmarks for US dollars, before the euro, the Deutschmark leg settles through German infrastructure. The dollar leg settles through American infrastructure. Different systems, different time zones. Think of it like a property sale, where you hand over the keys in the morning and the payment arrives in the afternoon. For a few hours, one side has fully completed their obligation, and the other has not. Under normal conditions, that gap closes without incident. The question nobody had formally tested before June 1974 was this: what happens if the other side disappears during that gap? Bankhaus Hallstatt was a privately owned bank in Köln. By 1974, according to BIS documentation and academic analysis, it had become an active dealer in foreign exchange markets. In 1973, the Bretton Woods fixed exchange rate system, which had governed major currency relationships since 1944, broke down. Major currencies began floating freely for the first time in the modern era. For a bank with large positions in foreign exchange, that volatility was not an opportunity. It was exposure. And Hallstatt's exposure was growing faster than anyone on the outside could see. The bank had accumulated large foreign exchange positions. By March 1974, auditors found something unusual. Hallstatt's open foreign exchange positions had reached 2 billion Deutschmarks, 80 times its own internal limit of 25 million Deutschmarks. The positions were ordered closed. It was too late. By June 1974, according to BIS Working Paper 13, Hallstatt losses on its foreign exchange operations had reached approximately 470 million Deutschmarks, more than 4 times the size of the bank's own capital at the point it first became over-indebted. The bank's auditors had discovered the scale of the exposure months earlier. A medium-sized German bank had taken massive positions on currency movements, hid the losses from its board through a secret accounting scheme, and simply ran out of road. It happens. What happened next had never happened before. German regulators withdrew Hallstatt's banking license on the afternoon of June 26, 1974. In Germany, the banking day was over. In New York, it was mid-morning. The banks that had already sent Deutschmarks to Hallstatt that day, expecting US dollars back that afternoon, found their incoming payments suspended. Hallstatt's New York correspondent bank had received notice of the closure and stopped outgoing transfers. There had been no warning. Once the license was withdrawn in Germany, the instructions Hallstatt had issued were no longer valid. But by then, the Deutschmarks had already moved. One leg had settled, the other never would. One side had handed over the keys, the other side no longer existed. The Bank for International Settlements gave that risk a name: Hallstatt risk. The direct losses to Herstadt's counterparties were significant, but according to the Bank of England archive records, what happened next was worse. When the news of the closure reached other financial centers, banks with no exposure to Herstadt at all began delaying their own outgoing payments. They were waiting to confirm their own incoming funds had arrived before releasing anything to anyone else. The contagion was not Herstadt spreading, it was Herstadt revealing. BIS analysis and Bank of England records showed that lending rates spiked and credit was curtailed across financial centers. A bank almost no one outside Köln had heard of had exposed something that had not previously been established with such clarity. Settlement risk was not a problem between two counterparties. It was structural. It lived inside the architecture of the global payment system itself. The regulatory response was swift by the standards of international financial coordination, which, to be fair, is a low bar. Within months of the collapse, central bankers moved to respond. They created a permanent international body under the auspices of the Bank for International Settlements, formed specifically to coordinate supervisory standards across borders to address the gaps the Herstatt failure had made visible. That body still exists. It is called the Basel Committee on Banking Supervision. The capital requirements, stress tests, and liquidity ratios that govern significant banks globally today are all administered through frameworks developed under the Basel Committee. That committee was established in direct response to the cross-border failures the Herstatt collapse exposed. The settlement problem itself took considerably longer to resolve. The solution, a global settlement utility where both legs of the transaction complete at the same moment, not the keys in the morning and the payment in the afternoon, but both simultaneously in the same room, became operational in 2002. It took nearly 3 decades to build a fix for something that failed in a single afternoon. That institution is called CLS Bank, Continuous Linked Settlement. Here is what the public record shows. According to the Bank for International Settlements 2025 Triennial Survey, the global foreign exchange market processes approximately $9.6 trillion every single day. According to CLS Group's published figures for April 2025, CLS Bank settled approximately $2.8 trillion of that volume through a system where both legs settle simultaneously, closing the gap. Most of the market still does not use it. Not every currency is eligible for the system. Not every institution is a member. Membership carries operational, technical, and cost requirements that not all market participants meet. According to analysis published by both the Bank for International Settlements and CLS Group, this gap has been formally documented and remains open. The Herstatt gap between one currency delivered and the other not yet received still exists in the largest financial market on earth. 50 years later, the gap is still there. The market that contains it is $9.6 trillion a day. Make of that what you will.